Hello and welcome back to CMA's Maritime Oil Trading. Today I want to talk about something very big for West Africa, and that is the possibility of a Dangote Refinery IPO, or a wider public investment opening into the refinery. Now, this is not just a finance story. It is also a trade story, a shipping story, and a market power story. Because when a refinery like Dangote starts opening up to public investment, the impact goes far beyond ownership. It can affect how the refinery raises money, how it expands, how products move across West Africa, and even how Europe responds to the new market balance. Let me explain it simply. For many years, West Africa has depended heavily on imported refined products. We produce crude oil, but we often import back gasoline, diesel, and jet fuel. That means the region exports crude and buys back finished products at a higher cost. That model has been in place for a long time. Now, Dangote changes the picture. If the refinery keeps growing and gets stronger support through public investment, it can supply more of Nigeria's needs and also supply neighboring West African countries. That means the region can begin to depend less on Europe for fuel imports, and that is a very big shift. What this really means is that West Africa may start moving from an import-dependent system to a regional supply system. Instead of buying so much fuel from Europe, more products may move from Nigeria into countries like Ghana, Benin, Togo, Cote d'Ivoire, Senegal, and others, depending on pricing and logistics. That is what I mean when I say market reset. A market reset simply means the old way of doing business starts to change. For years, a lot of fuel trade in West Africa has been built around Europe supplying the region. But if Dangote becomes a strong regional supplier, then the whole flow of products can change. That also affects Europe. Europe has long been a major supplier of gasoline, diesel, and jet fuel into West Africa. If West Africa starts sourcing more products locally or regionally, then Europe may lose some of that export demand. European refiners may then need to find new markets, and that can affect pricing, margins, and freight movements in the Atlantic basin. So this is not only a West African story, it is also a Europe story. For traders, this means the old Europe to West Africa product routes may no longer be the only game in town. You may begin to see more regional coastal movement. You may see more short sea shipping. You may see more storage demand, more terminal activity, and more importance placed on Nigeria as a fuel hub. That creates winners and losers. The winners may be marketers, traders, storage operators, shipping companies, and marine service providers who understand the new flow. The losers may be businesses that depend only on old import models and do not adjust quickly enough. Of course, there are risks. The refinery still has to deliver reliable supply. Product quality must stay consistent. Shipping and logistics must work well. Pricing must stay competitive, and the regulatory environment must remain clear. If those things are not stable, the market reset will slow down. But if they do work, then this could become one of the biggest downstream shifts in African energy in years. So when you hear about a Dangote Refinery IPO or public investment opening, do not think only about shares. Think about regional trade, fuel supply, freight, competition, and the future of West Africa's oil market. This is a story about power shifting from import dependence to regional control. Thanks for watching. If you found this useful, stay with CMA's Maritime for more oil trading, maritime, and West Africa market breakdown.